Welcome to today's analysis on EURUSD currency pair. This overview will shed some light what happened on the market this week and what could happen next week. If you like the analysis, click the like button and subscribe. Let's go! Since the last analysis, the EURUSD currency pair has made outside of the range where it was held around for 3 weeks. The last analysis that we had was here at this date, where the price still was inside the price range. That week the price had a false breakout to the downside and then returned back inside the price range and stayed inside. And the week has ended here at this level, and on a Monday the price has gone outside. The Monday candlestick has closed the day above previous candles close and also almost above the previous candle's highs. This was also one start of the breakout to the upside, but then after that has happened, the price returned back down with strong bearish engulfing candle. This was also one of the examples of the false breakout to the upside. Then the price has stayed for a week again inside the price range. We can see here that we have a downtrend resistance line, and the price has gone several days until reached this downtrend resistance line. Then this week the price has managed to break to the upside, closing the daily candle above previous all candles, previous highs and also candles close, and then reached almost 1.03920. This is a supply level zone where the bears are waiting the price to push down, and also this is also a target for the buyers who open the trades here around this level inside this price range, or also here at the demand level. This was their target. So when the price has reached this supply zone and also the target, the price returned back down. At the same day, the price has closed the day right on the 1.02975 resistance line, which then was the next target to be broken. On the next day, the price has closed the day above this resistance line, which now this resistance line acts as a support. The price could not close higher at the higher levels because this is a strong supply zone, and also here are the buyers who took outside the trades. They have gotten open here, so they locked the profits. On a Friday, which is usually the day when if you have a strong move days before, you have a decline, which is also normal way when the buyers in this case have closed their trades before the weekend, so the price has declined down. But the current status, what we can see here in this chart, is that we have the price outside of the price range. This means this is not a false breakout because we have a one candle breaking outside, we have the second candle which has closed above previous candle high, and this is the Friday that has pushed the price down because of the traders locking their profits. So for the next week we have a possible scenario here. This is the support zone for the price because the price is currently at the top of the previous price range. This means the price has returned back down, testing this upper resistance, which was a resistance. Now it's acting as a support. We will see, will the price hold or it will return back down around here and then find its way up. The next target I am watching is the price is reaching 1.03920 because this is the next level where the price could move the next week. And that is because the price has gone outside this price range, then the price has returned down, now testing this support zone. We have also here confluence of support, which could make the price find much more buyers here that are pushing the price up and then reaching this level. This level will be also hard to break above because we have here a strong selling zone, the supply zone, where the sellers are waiting, and also the buyers will try again to catch the wave and get out here as their target. So in the next week we need to wait the price to make some kind of bullish price action signal around this area, possibly here also, and then return it back up, reaching this level. we could see also the next week again the price reaching this level around here. This is the area, because we have here, for example, in the previous example, when the price was heading down, we can see the price has much more problems breaking this area. So this area, for example, also this high of this candle, and also this is the low, and also this is area where the price had problems reaching higher levels. So this is also the first place where the price will find a strong supply zone. This means the price could return down and then wait for the buyers to find more strength. For example, here, this is the area right now where is the demand level, then to reach higher levels. But for now, we are expecting the price to return back down a little bit more, and then we need to find a demand zone with nice price action bullish signal to enter into the trade and ride the wave up to 1.03920. So have in mind that the price is currently here at the zone where is the price range, and also I'm expecting the price could reach this level, because you can see here this is the area where the price had problems reaching higher levels, where is supply level, which now should act as a demand zone for the price. So we are expecting the price to reach this level here, and maybe some of the wicks, or making a nice bullish candlestick, which will suggest the price further will continue to move up. So stay tuned and watch for the nice price action signal before entering the trade, and also pay attention to the risk to reward and set the stop loss, which should be below this level. This means that this level here, because 1.0090, this is the level where the price could not move down because of strong buying, because of the strong bullish pressure and demand zone. So if the price reaches this level, this will mean this zone, demand zone, has been broken and the sellers have took over again. That is all from today's analysis. I hope you enjoyed. If you have any question, feel free to leave a comment. If you like the analysis, click the like button and subscribe. See you next time and a happy trading.